All right, hello and welcome everybody. Doug here with the LincolnList.com doing another trade recap here for you. As you can obviously see, it was a very productive session with close to $7,000 in gains, but yet it's a very bittersweet $7,000 in gains. And that might sound crazy at the beginning, but by the time I get done with this video, you're going to understand completely what I'm talking about here. And this is going to be one of the more important lessons that I've done when it comes to these recaps here recently, and specifically surrounding this ACIA. Now, before I get into that, here's the topic. We all know that the biggest enemy in this trading game is you. Your psychology, your ability to adapt, how you react to your surroundings, how you deal with losses, how you deal with your wins, all of that combined, you as an individual and the way you react to things, your ego and all of that, defines ultimately the level of success that you will obtain in the stock market. And I think one of the biggest drawbacks for those that are struggling is the fact of that ego. And this was a tough thing for me early on in my career to kind of overcome. And let me explain. Let's say, for example, you are in a trade and the trade is not working. So once you have made, you've obviously, we'll back up for a second. You've obviously made some sort of technical analysis, fundamental analysis. You had some sort of something in there that made you decide to push the button and buy or short sell this particular security. And then it's not really working out for you. Maybe you had a stop in mind and it's past that, or you find yourself in this level of confusion. So the first thing you do is for example, maybe run to social media. You do a search for the ticker and you pull up a bunch of stuff and trying to find an opinion across the board. And I know a lot of people do that. I've been guilty of doing that myself. But what you find out, and what I mean by ego, is you scroll down through that and you're really not looking for an opinion. What you're looking for is someone who agrees with you. And this is how this whole social media trolling comes up, when people don't agree with your side of the trade. So I know people do this. And my point is this. When we allow our ego and our emotions to get in the way, we are freaking doomed as traders. I mean, straight up, game over for you. And I know that's a long rant, but this is here's what we're going to talk about ACIA. I fell victim to that big rookie mistake. Now, I've been pretty good with this over many years of my trading career. I've tried not to get involved. You know, there's things that you want to happen in the market. Of course, you go long, you want the stock to break out. I mean, that's what happens. But I try not to think about that. I just try to let the chart and everything play out according to my analysis. And sometimes I'll be right, sometimes I'll be wrong. But overall, you know, as time passes, I should be right a lot more than I'm wrong, and thus I'll make a considerable amount of money. I mean, that's the way I look at it. And I try not to look for things or beg, or I should say, getting in a situation of hoping something turns around, you know, hoping this scenario plays out. Because once you rely on hope, then, you know, like they say, hopers are dopers. So here's what I'm going to talk about ACI rather than me just ranting. I think you understand my point. ACI, I felt myself falling back into that trap. First of all, I had the hardest time believing this stock making this kind of move. And I'll tell you why. If most of you are familiar with it, if you're not, they just IPO'd back in May. And when they IPO'd, their price was $23. And I thought this thing was overbought in the 48s. I'm thinking, you know, all of these intelligent minds, these analysts, these places that take stocks public, these firms and funds and all that kind of stuff, all these people came up with what they thought this stock was worth. And they came to the price according to their competitors and what they were worth. They said, hey, this stock is worth $23. So me, like so many people, thought, well, what the hell is it doing at 48? You know, I couldn't make sense of that. So it kept going up, and I have a swing account as well, so I shorted some up towards the 50s, and I thought, this has to be the top. This has to be the top. Well, it kind of consolidates, you know, kind of bounces up a little bit, consolidates here in the 60s, and then it starts to curl up again, and I cut my position, take a loss. I tried it a few other times, took a loss, you know, and I just kept going back. I always just kept shorting this stock, and I would always say that to myself. I can't believe what's it even doing up here. And the same thing I explained earlier, I would read stuff, and I never ever read hardly anything. I don't think I've finished 2 books in my entire life. You probably already figured that out. But I'm trying to read stuff on it, and I don't get it. And then it got to me so much, I actually emailed the investor relations because I'm so baffled. And I hope you guys are following along, because by this time, I am showing the classic case of ego, because I am begging, I am like praying to trading gods at night. Please make this thing go down. I just want it to go down. And then it gets to the point where I really hate this thing. I hate it. And now it becomes, you kind of see what I'm saying? You cross over to the realm of becoming personal. Now I'm taking it's personal. This is not ACE. This has nothing to do with ACIA. It's not their fault that their stock is going up. And I don't control anybody who's buying stocks. I don't control the market. And that's where I made the mistake here. Now, obviously, when you see it, $5,200, $5,300 in gains, you're like, I don't see what mistake you made. Well, here's the mistake that I made is I actually shorted a little bit going into the earnings, which I never do. Again, another rule broken that I never do. I'm like, it has to come down. The street has them at 13 cents. They've gone up. They're going to have to say all the right things to make it go higher. And bam, as soon as they open their mouth, this thing starts shooting out. And almost with on instinct, I had finally capitulated, not just on shorting, but sort of the saying, if you can't beat them, you join them. And that's exactly, I just flipped the position. And, I added it into my day trading account. That's what you're seeing here. But well over from that point, if you count the others, it's close to $9,000 in gains just from that period of the earnings to the late day here, which was Friday. Now, you're still probably wondering, why are you so mad? Well, why I'm so mad is because I have been screwing with this stock since it was in the 40s, trying, I don't know how many times. I tried to short this thing in the 40s, losing almost every single time. And maybe if I won, I picked up maybe $100, $150 here and there. That's my point, because if I would have dropped my bias back then, I could have seen that it's not up to me. And here's my point, guys. Here's my point. It's not up to us. And this is the purpose of the lesson. It's not up to us. We don't make the rules. We don't have enough money to manipulate or to control the market. This thing had 3 million, 4 million shares traded. Your 100 to 500, 1,000 shares isn't going to do anything to the price of the stock. We can't manipulate it. We can't change it. And the point I'm trying to make is we often fall at pros alike. The only difference between pros and amateurs is pros do it far less than amateurs. But we fall into these things where we get emotional about it and we try to justify it. And one of the things I've always told my students and taught in my classes is when you start trying to justify or make sense of the market, you're screwed as well. You can't do that because there's so many things that don't make sense. It doesn't make sense that the offering was only $23 on this and the thing is trading at $95 3 months later. They screwed that up. It doesn't make sense that the street said they were going to have 13 cents a share for earning and they had 77. They've been wrong from day one. But my problem was listening or trying to justify what was happening rather than joining the trend. That's why I'm angry, because yes, $9,000 is a lot. I could have made 20 or 30 if I was on this stock. We've been trading this stock since the beginning of July religiously in our trade room. So I could have just given up way back then and joined the crowd. I'd probably be up $30,000, $40,000. Of course, if ands, buts, candy, nuts, would be Christmas every day. But I think you guys know what I'm talking about. So the lesson is this. You can't get involved in that. There are periods of time in this market where a certain thing is going to happen. The SPY, for example, right now, we all know that's its own kind of animal. Why is the market up? Companies, not all the companies are making money. The economy isn't really recovered, but yet the market's at all-time highs. If you pay too much attention to that, it's okay to be aware. It's okay to be aware and understand, but if you pay too much attention to that, it's going to get in your way of making good decisions. Just kind of like we talk about the P&L. You never look at your P&L during the day because your P&L may influence your decision. And noise, TV shows, social media, articles, seeking alpha, that kind of stuff. That stuff can influence your decision. And when you got to think about when you get into a stock, there is a reason that you've done that. And of course, when that reason no longer exists, you have to get out. And this is a tough thing because we put a lot of time in, and this is one of the reasons why it's so tough, because we put a lot of time into what we're doing. You know, you guys study, I'm sure. You study hard. You look at chart patterns. You might be a fundamental trader where you trade off of fundamentals. And you're looking through all this stuff. You're studying the company's background and all that. And you put in hours and hours into a trade. And then when it doesn't work out, you can't see how no one else can see what you see, right? And that's an irritating thing, and sometimes that's the ego. When you're like, that's how I felt with ACIA. I couldn't see how no one else could see what I was seeing. Of course, somebody who longed it going, hey, idiot, you couldn't see this. Okay, I am the idiot. You know, I couldn't see how it could be offered at 23, how it could be going up this much. But the point is, it's reality. And this is what's the beauty about charts and charts trading. It's reality. It doesn't matter what the numbers are. It's all irrelevant. It doesn't matter if a stock is up 20%, 30%. That's what makes these things go. You'll see some of these other good trades here like GBR or Hain. Let's take an example of Hain. You know, this was the trade that just happened to be working as everything was breaking out. You know, buying this Hain on the breakout here. You know, this is something that maybe a week or so I wouldn't have gotten involved in, but it was like everybody keeps buying this up. So the stock is up 6% already. And I'm buying it late in the day on the breakout. But that's what the chart said. That's not what logic said. That's what the chart said. So really, really nice breakout. Actually went a lot further than I thought. I was looking to get maybe 50 cents out of it. GBR, you'll see, was another good one here. These little stocks have been breaking out. And this is the little stock theory. You know, when you talk about sense and making no sense and charts are being real. I mean, we can go, how far do we have to go back? VLTC, KBIO, Gene, Digley, Lake, the whole works, right? These little low float cheap stocks, if everything was legit and made sense, you wouldn't see moves like this. I guess that's my point as well. You know, it is what it is. And if you go into it taking it as a trading vehicle with the intent to make money, looking at the price action and focusing on the charts, there's a lot of money to be made. And that's the whole point of this. Is the biggest enemy in trading, of course, is you. How you react to things and how you do things. You know, most of us have a really good way of finding a stock and coming up with a good idea. That's the easy part. The hard part is what happens when you get into the idea and it works out. When do you take your money? What happens when it doesn't work out and it's really smoking you? When do you call it quits? You know, and that's the balance that you have to struggle with throughout your trading career, because sometimes you'll cut that for what you thought was the high and the stock goes higher. Sometimes you'll take a loss and then 30 minutes later it'll be higher than where you bought it. And you're like, oh, I got out too soon. I mean, how many times do you see it? I got out too soon. I got in too early. You know, all kinds of excuses out there, but that's what really determines it. And I think in this case with ACIA, yes, in the end I was able to make some really good money on this trade. But since I eyeballed it pretty much from $35 to almost $100, it seemed like, to only make this much, well, that's a little bittersweet because I'm to blame. I don't blame anyone else for it. This is my fault. I'm the one that should have been on the right side of this thing from day one. I got smoked. I don't know, maybe after the fourth or fifth time of getting smoked on a short, I should have said, hey, dude, why don't you buy the damn thing? Quit fighting it. Why are you fighting? And again, that's something I usually don't do, but I'm guilty. I'm guilty in this case. And I thought I would share it with you because I'm sure, you know, it kind of reminds me of my earlier years in trading. And I'm sure some of you I'm not sure some of you, I know all of you. It's just whether or not some people want to admit it. We've all been guilty of it. Some, of course, more guiltier than others. But try to keep that in mind. You know, that's why we trade charts, is because charts determine price action. And that's what it's all about, determining price action. If the price action says a stock wants higher or lower, that's exactly where it's going. If the next range, the next resistance, the next support is so far away, that's probably where that stock is going to go. Whether you like it, you want it to or not, that's what's probably going to be the reality. So you have a choice to either get out of that position or join the crowd, one of the two. So anyway, I kind of hope you guys learned there. As always, if you need help with your trading, you know how to find me. Visit thelincolnlist.com. Keep up with my blog. Follow me on Twitter at The Lincoln List. Follow me on Facebook at The Lincoln List. And follow me on YouTube at The Lincoln List, where I post a lot of these videos. Subscribe to the channel if you can. As always, if you just have questions, you don't have to be a member of the service to ask me any kind of trading question that's on your mind. My email is support@thelincolnlist.com. Thanks again, guys, for watching this video. Take care. Until next time, talk to you soon.